Good morning, folks, and welcome back to your daily dose of market buzz on Capital Markets Quickie. I'm your host, Endrit Sella, bringing you the latest from Wall Street with a side of easygoing chat. So grab your coffee and let's dive in. Now, let's talk about the market mood. Yesterday, the trading floor was humming with a particular tune, and, well, it wasn't exactly in the key of confidence. Seems like any company that missed the mark on earnings per share took a plunge, the likes of which we haven't seen since 2011. Yeah, that's a bit of a throwback, isn't it? Experts at FactSet spilled the beans. Standard & Poor's 500 companies that didn't hit their earnings per share targets saw their stock prices tumble by 5.2% on average in the 2 days after reporting. That's a steep drop, more than double the 5-year average. A bit of market trivia for you: this is the roughest patch since the 8% fallback in the second quarter of 2011. So what's the word on the street? Well, investors are not handing out free passes. They're zooming in on the nitty-gritty, the fundamentals, and really sizing up what thrives and what dives in this high-rate economic playground. Take yesterday, for example. Some of the big names that usually grab headlines were not the darlings of the day. Stocks like Warner Bros. Discovery and a few others were on a downhill ride, dropping as much as 16% in a single session. And here's where it gets real interesting. The AI lending platform Upstart is feeling the heat too. They reported a wider loss than Wall Street expected, and their revenue, let's just say it's seen better days. The CEO, in their earnings call, pointed to sky-high rates in their marketplace, an outcome of those soaring interest rates and a shaky consumer economy. Upstart's roller coaster ride this year saw them soaring with AI hype. But now, they're back on the ground, with shares tumbling nearly 30% yesterday. They're a stark example of how the small fry in the Russell 2000 index are bearing the brunt of these interest rate hikes. To wrap it up, it's a jungle out there, and interest rates are the predators. Smaller, speculative companies are particularly vulnerable. As investors, it's crucial to know what you're up against, as these earnings reports and management calls are laying the cards on the table. All right, that's a wrap for today's Market Quickie. Keep your eyes peeled for tomorrow's insights, and remember, stay sharp and invest smart. I'll catch you tomorrow morning with a brand new episode of Capital Markets Quickie. This is Endrit, signing off.